You can know every chart pattern, study every trading book, and still lose money every time you hit buy. Why? Because trading isn't just about skill. It's about how you think. Mark Douglas said it best. Most traders lose not because of their system, but because of what's happening inside their mind. You second-guess yourself. You panic when things move fast. You hold losers too long. You take profits too early. And none of that changes until you change what's up here. See, your brain is wired to avoid pain, not to take smart risks. So every time money's on the line, your emotions take control. That's why trading feels hard, even when you know what to do. Douglas called this the mental environment. The beliefs, fears, and habits inside your head that ruin good trades. If you don't learn how to control that, you'll stay stuck, frustrated, confused, because the real edge isn't in the charts. It's in your mindset. And to fix it, we need to start with your beliefs. Most traders think they lose because they picked the wrong setup, wrong entry, wrong time. But Mark Douglas saw something deeper. He believed your beliefs, the way you see yourself and the market, shape every trade you take. Think about it like this. If deep down you believe I'm not lucky or I always mess it up, that belief shows up in how you trade. You hesitate, you doubt, you break your own rules. It's not the market that causes you to fail. It's the invisible script running in your head. Douglas called this your mental environment. It's built from every experience you've had. Wins, losses, childhood messages, fears, and it controls your trading behavior without you even realizing it. That's why two traders can use the same system and get completely different results. It's not just about what you know, it's about what you believe while you're trading. Are you calm or tense? Do you trust your system or always second-guess it? Do you feel in control or like the market's out to get you? Your answers come from your mental environment. And unless you learn to change those deep beliefs, you'll keep repeating the same mistakes, even with a perfect strategy. So how do you change it? We need to talk about fear, because that's what shows up first when your beliefs are shaky. And fear does more than just make you nervous. It hijacks everything. Fear is one of the most powerful forces in trading, and it shows up in ways most traders don't expect. You might hesitate on a setup you've practiced for weeks. You might close a trade too early, not because it hit your target, but because the red candles made you nervous. Or you hold a losing trade too long, hoping it will turn around, even when you know it's time to exit. These aren't technical mistakes. They're emotional ones. Mark Douglas believed that fear doesn't come from the market itself. It comes from our internal response to uncertainty and loss. Most traders enter the market with a strong desire to win and a stronger fear of losing. They expect the market to reward their preparation. So when a trade goes against them, they see it as a personal failure rather than a normal part of the process. This is where trading psychology becomes essential. You can't remove uncertainty from trading, but you can change how you react to it. Douglas taught that the goal isn't to eliminate fear, it's to understand it, to recognize when it's clouding your judgment, and to build habits that help you act with clarity anyway. That means trusting your process, not your feelings. It means focusing on long-term results, not single outcomes. And most importantly, it means separating your self-worth from your trade results. Because when your identity depends on being right, every loss feels like a threat. But when you accept that losses are part of the game, fear loses its grip. This shift doesn't happen overnight, but it's the foundation of emotional resilience in trading. Discipline is not about forcing yourself to follow rules. It's about creating a mindset where those rules make sense, even under pressure. Mark Douglas believed discipline came from two things: neutral expectations and emotional detachment. Most traders are outcome-focused. They want every trade to be a win. But that mindset adds pressure, because each result feels like a judgment. The disciplined trader thinks differently. They accept that any single trade is random. What matters is the long-term edge, not short-term results. That shift removes a lot of mental noise. It's no longer about proving something with every trade. It's about staying consistent. And that's where real discipline starts. Not in trying to feel confident, but in acting with clarity regardless of how you feel. Douglas called this thinking in probabilities. Imagine flipping a coin 100 times. You don't panic if it lands on heads 3 times in a row. You trust the odds to play out over time. Trading works the same way. Discipline is built when you stop reacting emotionally to outcomes and start seeing each trade as just one move in a larger process. That's not easy. It takes practice, journaling, reflection, and sometimes even stepping back to recalibrate. But the payoff is big. Because when you have mental discipline, you're no longer shaken by wins or losses. You're steady. And from that place, consistency becomes possible. But even with discipline, there's one more hurdle: maintaining that clarity when money is involved, especially over time. That's where self-sabotage shows up, and where most traders slip back into old habits. One of the most misunderstood concepts in trading is consistency. Traders assume it means constant wins, but in reality, it means showing up the same way, regardless of outcome. Mark Douglas emphasized this distinction. He believed that consistency wasn't about performance, it was about behavior. A consistent trader doesn't just follow a strategy. They follow it when it's boring, when it's unclear, when it's uncomfortable. They don't abandon the process just because the last few trades didn't work. This kind of stability is rare, because most people are emotionally tied to results. They feel good after wins, anxious after losses, and those feelings drive their decisions. Over time, that creates a pattern: success, then self-sabotage. Consistency breaks that cycle by grounding your actions in process, not emotion. It also builds trust in yourself, something most traders quietly struggle with. If you don't trust yourself to stick to your rules, then no strategy, no book, no mentor will help you long-term. Douglas saw this as a key mental breakthrough. When traders accept that each outcome is just one point in a larger data set, they stop reacting to noise and start focusing on execution. And this leads to something rare in trading: calm. You're no longer trying to predict every move. You're just managing your system. And over time, that steadiness compounds into real results. But even the most consistent process can be derailed if your identity is built on needing to win. Which brings us to one of Douglas's core insights. The best traders aren't outcome-driven. They're process-driven. And to really live that truth, we need to talk about detachment. Many traders think success means controlling the market, but Mark Douglas argued that real success comes from controlling yourself. At the core of his philosophy is this: the market doesn't care who you are. It doesn't reward effort. It doesn't punish failure. It just moves. And if your sense of self is tied to those movements, you'll be on an emotional roller coaster every single day. Douglas believed the key was detachment. Not in the cold, indifferent sense, but in understanding that the market isn't personal. Your wins don't make you a genius. Your losses don't make you a failure. They are simply data points. That mindset creates space between your identity and your performance. And that space is where good decisions are made. Traders who lack this detachment often swing between overconfidence and self-doubt. They chase after wins, then spiral after losses. They try to prove something to themselves or others, instead of just following the process. But when you detach, you stop needing every trade to validate you. You stop fearing what a red candle says about you, and you start making cleaner, more focused decisions. This detachment also strengthens your ability to adapt. You're no longer trying to be right. You're trying to be effective. You're able to change your approach when needed, because your ego isn't clinging to a single outcome or identity. Over time, this way of thinking rewires how you see the market, not as something to conquer, but as something to engage with, objectively, consistently, and without fear. And that brings us to the final shift, letting go of the illusion of control and embracing the one thing you can control, your mindset. Every trader starts with the same question: how do I win more? But the deeper you go, the more that question changes. It becomes, how do I think clearly under pressure? How do I stay consistent when the market isn't? How do I stop getting in my own way? Mark Douglas believed that trading wasn't just a technical game, it was a mental one. And for most traders, the market isn't the opponent, it's their own mind. They get caught in loops of fear, hope, regret. They make emotional decisions, then blame the market. They seek the perfect strategy, not realizing they're the variable that needs work. Douglas's work wasn't just about being calm. It was about rewiring how you see risk, reward, and control. He taught that once you let go of the illusion that you can control outcomes, you become free to focus on what actually matters: your process, your mindset, your ability to act without hesitation or fear. And that's where transformation happens. It's not loud, it's not exciting, it's often quiet, even boring, but it's steady, reliable, free from chaos. That's the shift that lasts. You move from chasing certainty to mastering probability, from reacting to noise to responding with clarity, from needing to win to simply executing your edge. And in that mindset, you don't just trade better. You think better, you live better. Because trading, like life, isn't about control. It's about adaptation, discipline, awareness. Most traders never make this shift. They stay stuck in the same patterns, chasing the same highs, avoiding the same lows. But a few, the ones who internalize what Douglas taught, they don't just survive the markets, they thrive in them. And it all starts with one decision: to stop treating trading like a battle and start treating it like a craft.